Sponsored agreements may be cost reimbursable or fixed based. This describes the structure of payment and monitoring in the agreement. A cost reimbursable agreement is one that reimburses the awardee for actual, allowable, allocable, and reasonable project cost in line with the approved budget. They are the most common agreement type in sponsored research agreements. This agreement type is suitable for research and development work, where the work is exploratory and focused on expanding knowledge. Payments are not conditional upon successful outcome of research results, but upon submission of invoices and completion of progress reports. The sponsor relies on the awardee to make a good faith effort to further project goals within the total agreement amount. Progress reports document the technical progress of the project in conjunction with detailed financial reports. The awardee agreement sets forth the invoicing frequency and requirements. Common invoice requirements are inclusion of current and cumulative cost, including cost sharing, breakdown by major cost category, award number, and certification in accordance with the Code of Federal Regulations. See 2 CFR 200.305. Firm fixed-based agreements are agreements where preset fixed payments are contingent upon the completion of deliverables, regardless of the actual cost. There are different types of fixed-based agreements, including firm fixed price, fixed amount, and fixed rate. Firm fixed price is a Federal Acquisition Regulation, or FAR, which regulates federal contracts. In firm fixed price agreements, payments are on a mutually agreed upon price. See FAR subpart 16.2 for more information. Fixed amount is a Code of Federal Regulation term for agreements where the total value of the award is negotiated up front. In this type of agreement, both the unit price and total number of units are known up front. See 2 CFR 200.201 for more information. A fixed rate agreement generally refers to an agreement where payments are based on a dollar amount per unit. In this case, the number of units may not be known up front. Fixed rate agreements are not a contract type listed in the FAR, but are mentioned in the NIH GPS, or grants policy statement, and clarified in NIH NOT.OD.18.222. Fixed-based agreements may be appropriate when the deliverables or milestones are well defined, the cost estimate is solid, and the funding will be sufficient to cover all project expenses. The payment is contingent upon completion of project deliverables and not tied to the actual incurred project cost. The sponsor is not obligated to pay specified amounts due to incomplete or delayed work. The awardee only receives the contracted amount even if the actual project expenditures to meet the deliverables are more than the contracted amount. Residual balances should remain with the awardee, but remember the importance of properly budgeting to ensure the contracted amount covers the project expenses. Fixed-base agreements have a payment schedule instead of a detailed budget and should include specifics on the deliverables and the corresponding payment amount. The milestone payment amount should be inclusive of the applicable F&A cost. Invoices are triggered by completion of milestones or deliverables and include the deliverable completed and the milestone payment amount. Invoices do not detail the expenses. Fixed-base agreements should not be utilized to seek profit, and substantial residual balances are a red flag. This could jeopardize UCLA as the awardee's nonprofit tax-exempt status. This table depicts differences between the characteristics of cost-reimbursable and fixed-based agreements. In cost-reimbursable agreements, changes to the scope of work and deliverables are flexible, but may be subject to the sponsor's prior approval, whereas there should be no changes to the deliverables in fixed-based agreements. In cost-reimbursable agreements, prior approval from the sponsor may be required for rebudgeting, whereas in fixed-based agreements, prior approval for rebudgeting is not necessary. Carry forward may require prior approval from the sponsor in cost-reimbursable agreements, but is not applicable in fixed-based agreements. In cost-reimbursable agreements, payment is triggered by financial and progress reporting, whereas in fixed-based agreements, payment is triggered by the completion of deliverables. The budget information included in the award agreement also differs by the agreement type. Cost reimbursable award agreements include a detailed budget by cost category. Fixed-based agreements include a deliverable or milestone payment schedule or rate schedule. Expenses and cost reimbursable agreements are auditable, but in fixed-based agreements, expenses are generally not auditable. However, the applicable cost principles should be followed in fixed-based agreements as well. If there are any residual balances at the end of the project in a cost reimbursable agreement, those funds are returned to the sponsor. In fixed-base agreements, those residual expenses are generally retained by the awardee. In both agreement types, the estimated cost should be consistent with the applicable cost principles, sponsor requirements, and institutional policies. For example, awards from federal sponsors must comply with the federal cost principles of allocability, allowability, reasonability, and consistency. The project cost should be estimated with as much accuracy as possible. The budgets in both agreement types are subject to F&A cost. Refer to 2 CFR 200.201, FAR Subpart 16.2, NIH GPS 8.1.2.11, and NIH NOT-OD-18-222 to learn more.